welcome, I welcome you all to tonight's session. So, as you know, we normally start with the majors. Okay, so the first currency pair we'll be looking at is GBP USD. Few minutes late. What's happening on GBP USD? Now, I want us to first look at DXY, dollar index, to know the strength of dollar. Okay, let's look at, okay, this is the dollar index chart. Now, you would see that dollar index, DXY, has been bullish for weeks, even for months now. You can see it has been bullish. Now, if DXY is bullish, pairs that has USD as counter would be bearish. DXY being bullish indicates that the dollar is strong. Okay, if DXY is bullish, it indicates that the dollar is strong. And as you can see, from this point, the dollar has been bullish. DXY has been bullish. So this tells us that dollar is still very strong. Dollar is still very strong. But if we look at last week candle, let's see what we have. So you can see last week candle closed bullish. Now, if you go back, you will see that we had a resistance at this level. Mr. Ebenezer, you're welcome. I believe you can hear me. So you can see we had a resistance level at this point, and last week candle broke out from that resistance. That's an indication that demand has exceeded supply. And when demand exceeds supply, what is expected? Price is expected to go up. So I think the next target now is this high. We have a lot of stop losses at this level. Okay, so they will aim for this high. If this high is broken, the next draw on liquidity would be this next high. If this liquidity is cleared, the next high would be, the next draw on liquidity will be this. So with what we have on the weekly chart, USD is still very bullish. USD is still very bullish. Now, if we go down to daily, let's see what we have on daily. Let's see what we have on daily. If we go down to daily, I think last Thursday candle closed as a shooting star, right? Shooting star. And okay, that was on Thursday. Thursday candle closed as a shooting star. And Friday candle closed as a bullish candle. They hunted for the stops at this high. Can you see that? Okay, they couldn't break the high of Thursday candle. Now, on the weekly, we said that DXY is bullish. Now we have a support here. After the close of last Friday candle, this is a support, right? This became a support level, right? So at the moment, dollar is still bullish. DXY is still bullish. But if this support is broken, let's assume Monday candle closes below this level, then it's possible that the dollar will lose value. Are you following? That is if Monday candle closes below this support. If it closes below this support, then it's possible for dollar to lose value. But at the moment, dollar is still very strong. Dollar is still very strong. So let's go to the chart and let's see what we have on major currency pairs. So we're starting with GBP USD. Now, if you look at GBP USD, it was in a bullish trend, right? And at this point, this was a bullish structure because it was forming series of higher high, higher low, right? Higher high, higher low. It was forming series of higher high, higher low. So this is a bullish structure. And this was the last, this was even the last higher low, right? This was the previous higher low. Then this was the last higher low. And that structure was broken at this point. Really, this candlestick closed below the low of this candle. The structure was broken. So what we have here now is a bearish structure. If you apply the trend line, what we have here is a bearish structure. So like I said, you know, when we looked at DXY, we had a bullish structure on DXY. And you can see the reason why GBP USD also has been selling for months. Can you see it? Because DXY is bullish, GBP USD has been selling. Remember I said when DXY is bullish, it indicates that the dollar is strong. You can see the reason why dollar has been bearish for months. Can you see that? And with the candlestick formation we had last week, the way the candlestick closed last week, it is obvious that the sellers are still in control, right? It is obvious that the sellers are still in control. We cannot buy GBP USD with this formation we have on the weekly time frame. The bears are still in control. Okay, so let's go down to daily. What do we have on daily? So you can see on daily too, GBP USD is still bearish. But I wouldn't advise that you jump in and start selling at the current market price, because as far as I'm concerned, price is at premium zone at the moment. We need to see price pull back to a discount level before we consider selling. That is what I would advise. Wait for price to pull back to a discount level before you execute a sell trade. I hope that is clear. So how do you know discount level? Okay, you can make use of the, what's it called? Fibonacci 2. So this is last swing high. You can take it from this point, swing high to this swing low. So you should expect price to pull back to above level 50. Above level 50. That is area you should consider selling. Selling at the current market price is at a higher risk. Because if you sell from this point, where would you want to set your stop loss? It would not be right to set your stop loss at this level. It would not be right to set your stop loss at this level. They can easily hunt for these levels. The best level to use as stop loss or best price will be this swing high. Now let's calculate the risk. If we set our stop loss at that level, from this point to this point, that's about 190 pips. You sure don't want to take that kind of risk. That is too high, right? So it's best you wait for price to pull back to level 50, above level 50. It has to be above level 50 or above 61.8. That is where you consider selling. Okay, right now, GU is bearish, but we can't just jump in and start selling. We should see price pull back into a discount level, okay, before you consider selling. So that's my take on GBP USD. I'm still bearish. Let's see what we have on 4 hour. Okay, so on 4 hour, buyers showed up. That was on Okay, Friday, they tried to push price up, but they couldn't. Sellers came in, push price below this support. That tells you that the sellers are still in control. Now, I said you should wait to see price pull back to 50, level 50 or 61.8. Now, if you want to trade the pullback, if you want to take advantage of that retracement, what I would advise that you do is go to 1 hour and identify a resistance level, the most recent resistance level on 1 hour. So let's go down to 1 hour. So here's our recent resistance on 1 hour. This is our recent resistance, right? So identify that resistance. Okay. This is a resistance, but this is a support stone resistance. This was a support, became a resistance after this candle broke out from this support. Okay. But this one is a resistance, not a support stone resistance. So I prefer working with this instead of this support stone resistance. Are you following? So I work with this. So if a 4-hour candle closes above this resistance, I might consider buying GBP USD. I might consider buying GBP USD since there's a possibility of price pulling back to level 61.8 or above 61.8. If I decide to buy above this level, my stop loss would be, let's say the candle closed at this price. I decide to buy, my stop loss would be here. My stop loss is supposed to be here. So this is 45 pips. Now I want to calculate the potential profits on this setup if I decide to buy. Very important. You need to know the risk on the trade before you execute it. Also, you need to know the potential profits, how much you can be able to pull out on that trade. You should know those two things before you execute the trade. It is not when you have executed the trade, you will now start be reasoning how much you can make from that trade. No, you should have an idea of how much you can pull out. And like I've always said, ensure that your risk reward does not go below 1:1.5 minimum, worst case. Okay. Now let's calculate from this point to this point. This is 76 or 75 pips. So if I'm risking 45 pips on a trade, then I think 75 pips is a good reward on that trade. That's like 1:1.5 risk reward. So the risk, that's the trade is what's taking. The risk is what's taking because the risk is less than the reward. Are you following? So you should know these things before you execute the trade. It is not when you have executed the trade, you are asking me where to set your stop loss. I'm sorry, I will not respond. I will not reply you. You should know these things before you execute the trade. Or before you execute the trade, you should ask. Not when you have executed the trade, you will be asking for where should I set my stop loss. No, you should ask me that before you execute the trade. Okay, so know these things. If you don't know the risk on the trade, if you don't know the potential profit you can make on that trade, don't execute the trade. Don't execute the trade. Trading is not difficult. It's just that we try to make things, complicated for ourselves. It is not difficult. Define the risk, know the reward. Very important. So that's my take on GBP USD. Long term, it is still bearish, but there's possibility of price pulling back into a discount level. Okay, and discount is above level 50. Now you want to ask, why am I calling 61.8 a discount level, which is supposed to be a premium? This is a bearish move. Okay, if it was in a bullish move, then this from level 50 above will be my premium. Okay, it will be my premium. But since it's a bearish move, anything above this level is discount, and anything below this level 50 is premium. I hope that is clear. I hope that is clear. Okay. So let's look at Australian dollar USD. As you know, both are positively correlated. So if you're expecting a bearish move on GBP USD, we should expect a bearish move on Australian dollar USD, because USD is counter on Australian dollar USD, and also it is counter on GBP USD. And since USD is bullish, we should expect bearish move on pairs that have USD as counter. You know that. So let's see what we have on Australian dollar USD. We'll start with the weekly. If you look at Australian dollar USD, I think what we have here is a bullish setup. We have a bullish setup on. We have a bullish setup on Australian dollar USD. So here we had a support, right? We had a support, and you can see we have several candlestick formation indicating that the trend is likely going to change from bearish to bullish. You can see that. So at what point should you consider buying? Identify, go to lower time frame and identify resistance. Simple as that. Resistance and support are used for entries. Resistance and support are used for entries. Candlestick formation is used in defining trend. That's what I use in defining the trend of the market, candlestick. So after defining the trend with the candlestick formation, the next thing is the level to enter, best level to execute a buy or sell trade. And that is when support and resistance comes into play. Okay, so I've defined the trend now based on candlestick formation we have here. It indicates that the sellers are becoming weaker, they are becoming exhausted, and buyers are showing up in the market. Okay, so that's the buy for me. This is the buy setup on the weekly time frame. So entry, at what level would I execute a buy trade on? Okay, so we have a resistance here. But I like to work with the most recent resistance on 1 hour for my entry. Okay, so this is 4-hour resistance level, this level, or this level. For example, if before London session a 4-hour candle closes above this level, probably at that time I might still be asleep. I might miss that opportunity. Then if during London session, by then I'll be awake, a candle closes above this level. So this will be my first entry. If I missed the first entry, there was opportunity to execute after the breakout from this resistance. You can see. Okay, so let's go down to 1 hour. Okay, this is daily. This is daily resistance. Let's go down to 1 hour, 4 hour. So like I said, I like to work with most recent resistance level on 1 hour. Okay, from daily to 1 hour. So the most recent resistance, this is it. If 4-hour candle breaks out from this resistance, that's a buy for me. If 4-hour candle closes above this resistance, that's a buy for me. And the most recent support on Australian dollar USD, this is recent strong support on 1 hour. Okay, so it's either price breaks out from this low for me to sell, or price breaks out from this high for me to buy. 4-hour candle should close above this high. That's when I'll consider buying. And if a 4-hour candle closes below this low, I will consider selling Australian dollar USD. Remember, I said long time USD is bullish. So if we are buying, what we are trading is the pullback. What we are taking advantage of is pullback. Okay, we are trading against the trend. Okay, so buy above this level. Okay, sell below this level. Now let's go down to, let's see what we have on daily. So where should we set our take profits? Okay, let's go to weekly. I think the weekly information is okay. So price dropped from this point to this point. Okay, so you could apply your Fibonacci tool just to know where to set your your TP. You can take it from this point. So this point. If you don't want to apply Fibonacci, you can just identify the next resistance, which is this. If price breaks this level, there's a probability that it will aim for this resistance, support turn resistance. If you want to apply Fibonacci, ensure that the market is trading above equilibrium, which is above 50. Okay. Ensure that price is at a premium level, okay, which is above level 50. That is the area you can set your take profit. Okay. So if you are buying above this level, calculates the risk. Let's assume the candlestick closed few pips above this level. We decide to buy. Our stop loss should be, this is much. 90 something pips is much. Should be like 40 pips. Okay, I don't risk more than 40 pips on any trade. Maximum 40 pips. Okay, so if your risk is 40 pips, from this point to this point is how many pips? 168 pips. Okay, you can just go, since your risk is, don't be greedy. If you're risking 40 pips, just aim for maximum 80 or 100 pips. Okay, 80, 100 pips is okay for a 45 pip risk. Okay, so just set your TP. You must not go for all. Okay, it's possible to give you 120, but you shouldn't go for all. Okay, just go for 1 to 2 risk reward is okay. Okay, so if price gets to this level, there's a probability that Australian dollar USD is likely going to sell from premium level. Okay, so Monday, Tuesday, I will be looking out for buy opportunities. Probably on Wednesday, we could see, price drop. We could see change in trend from bullish to bearish. But right now, I wouldn't advise that you sell Australian dollar USD. You can only sell Australian dollar USD if this support is broken. 4-hour candle should close below this support before you consider selling. And if you are selling below this support, you should know the next target. Draw on liquidity is at this low of this candle. We have equal low here too. Anything that makes 4-hour breaks that level, price must drop to this equal low. There are stop losses at this level that need to be cleared. So they will push price down to this level. Okay. So if a 4-hour candle closes below this level and you decide to sell, you want to calculate, you want to know the potential profit you can make on this trade. So let's assume 4-hour closes below this level and decide to sell from this point to this point is how many pips? 76 pips. Okay, 76 pips. So on this trade, you shouldn't risk more than 40 pips or maximum 50 pips on this trade. That's if a 4-hour candle closes at this price. Okay, I want to know the potential profit I can make on the trade, 79. So if I could make 79 pips, then my risk should not exceed between 40 and 50 pips maximum. That is risk reward 1:1.5. I hope that is clear. So I expect bullish move on Australian dollar USD between Monday, Tuesday, but on Wednesday, Thursday, the trend could change from bullish to bearish. That's my take on Australian dollar USD. Okay, New Zealand USD, similar setup. I don't have to analyze this. Okay, the same setup we have on the setup here is similar to what we have on Australian dollar USD. Let's see. Let's start with the weekly. You can see similar setup. So you need to spend much time on this, right? Support. If support is broken, you consider selling. Okay. Resistance. Identify recent resistance on 1 hour. So the most recent resistance is this. So what we have here looks like a double top. So if you are considering buying, this resistance should be broken before you consider buying. This resistance should be broken. Okay, based on what we have on 1 hour, this is a bearish setup. This is a bearish setup. So you can't jump in and start buying. This resistance must be broken before you consider buying. Okay, so that's my take. buy above this level, if you are considering selling, the support on daily must be broken. Okay, support on daily should be broken. And if you are buying, you know where to set your TP. Just go to the daily or the weekly time frame. You could apply your Fibonacci or identify a resistance level, which is this. Okay, that could be your TP. You apply the Fibonacci to from swing high to swing low. Ensure that price goes into a premium level, which is above 50. Okay, so since this support is below level 50, so it won't be a good level to use as your CP. It has to be above equilibrium. Okay, so that's it for New Zealand USD. Next pair is USD card. So you can see last week candle. Can you see it closed as an hammer? It closed as hammer. So this tells me that there's going to be a change in trend from bearish to bullish. This is an hammer candle. Okay, this is an hammer candle. And remember, DXY is bullish. DXY is bullish. That means USD is strong. And on USD card, what do we have here? Hammer, which confirms that US dollar is strong. Okay, so this is an hammer. So let's go down to daily. Let's see what we have on daily. So you can see what we have on daily. Hammer. This is an hammer too. Okay, so this is what we have on the daily. This is a bullish setup. This is a bullish setup. But if you look at what we have here, see this, there was a support here, right? This was a support. Market tested that level and there was a strong rejection. So before you consider buying, this level must be broken because there was a rejection from that level. So if the buyers are able to break this level, that's a strong indication that the buyers have overpowered the sellers. We can say that price went into a range from this point to this point, right? So since there was a rejection from this level, that level must be cleared. The buyers must push price above this level for us to say buyers have now empowered or overpowered the, what's it called, the sellers. That is when we consider buying. We cannot jump in and start buying now until this level is broken. That is when we consider buying. And we had a support here on daily. So if sellers are able to break this low, this support, then that tells us that the sellers have overpowered buyers and there's a high probability for price to keep dropping. So that's it on USD card. Consider selling below this level, but if you are selling, you have to be careful because USD is still very strong. Okay, it's still very strong. You have to be very conservative if you are trading against the trend. It is when you are trading along with the trend, you can be a little bit aggressive. Okay, but when you are trading against the trend, you have to be very conservative. Okay, so that's my take on USD card. I would consider buying above this level. Okay, but like I said, I like to work with breakout from the most recent resistance level on 1 hour. So let's go to 1 hour. Okay, so this is the most recent resistance, which looks like a double top, right? You can see it here. It was a resistance. At this level, it was a support stone resistance. That tells you that that level is a key level. Okay, so if 4-hour candle closes above this level, I will buy, and my stop loss will be the low of this candle. I'm buying above this level, my stop loss will be at this level, which is how many pips? Let's assume the candle closes at this level. My stop loss will be around, let's say 30 pips. 30 pips. Okay, so this will be my first entry for buy on USD card. Okay, and like I said, if I'm to sell, this is the most recent support on 1 hour. This level must be broken for me to sell. You can see that price was in a range from this point, that it's in a range. So the high of the range should be broken for me to sell, for me to buy, or the low of that range must be broken for me to sell. Okay. Now, if this high is broken, I want to go down to lower time frame to confirm the structure on lower time frame. Okay, so if the 4-hour candle closes above this level, I want to ensure that there's a shift in market structure on, it could be 15 minutes, it could be 5 minutes, it could be 1 minute. Once I have shift in market structure on lower time frame, I would execute the trade. Now, I'm not using lower time frame to analyze the market, right? I've defined the trend using the daily, the 4-hour time frame, the weekly. Okay, so I use the higher time frames to define the trend of the market. I use lower time frames for entry. Okay, so I could go down to 1 minute, like the chart I posted. You will see it's a 1 minute chart, but I started analyzing the market from higher time frame, weekly down to 1 minute. Okay, so that's my take on USD CAD. Next pair is USD CHF. So let's start with the weekly. What do we have on the weekly? Still strongly bullish, right? Last week was strongly bullish on USD CHF, but I think price just tested the resistance level, and I think that's the reason for this rejection. Okay, that's the reason for this little rejection we saw on Friday. Okay, so it is still bullish. Okay, it is bullish based on what we have on the weekly time frame. This is a bullish setup, but the shift of market structure will take place if this high is broken. If a candlestick closes above this level, the structure changes from bearish to bullish. But at the moment, it hasn't changed. Okay, it has not changed. If you apply your trend line, you will see that USD is bearish. Okay. Okay. So it's obvious that USD is bearish, but they might want to clear liquidity at these levels, or the stop loss at this height. They might want to clear it before price will start dropping. That's my take on USD. It is still bullish at the moment. You cannot sell USD. It is still bullish. If you want to sell, the support must be broken, okay, on lower time frame. If you want to buy, the resistance must be broken. Simple. So let's go down to daily. What do we have on daily? It's still strongly bullish on daily. Do we have a support here we can work with? No support on daily. So let's go down to 4-hour. Okay, 4-hour, we have a support here. So if this support is broken, that would be a good time to risk selling. If this support is broken, that would be a good time to start selling. And you can see we had a resistance on 4-hour. Market tested that resistance level, and there was a little rejection from that level. Okay, so if the next candle closes above this level, there's that probability that USD will keep buying. And where would be the next target? The draw on liquidity at this level. So if a candle, let's say 4-hour candle closes, just patiently waits for 4-hour candle to close above this level. Now, as you know, if a resistance is level, it's possible that price will retest that resistance level, which has become a support, before it continues going up. So you can wait for a retest, okay? But like I said, if the close of the candle, if the difference is not much, let's say the candle close at this level and calculate it. If the difference is no more than 40 pips, you can execute the trade. You don't have to wait for a retest. But if you have the patience, wait for a retest. But the thing is that most times the retest might not occur. Price can just keep going up. So what will happen? You will miss that move. And it could be very, painful that, okay, you knew the direction of the market, but you could not take advantage of that move because you were waiting for a retest. So I always advise that, okay, if the retest would occur, why not go in? If you have good capital, let's say you trade with 0.1 lot size and the candlestick closes above this level, you decide to buy. Your risk is, let's say, 40 pips, okay? The reward on this trade is about 54 pips. That's not a good risk reward. That's not a good risk reward. So let's just say you are risking 30 pips on that trade. If you wait for a retest, your risk will reduce to, let's say, maybe 10 pips or 20 pips. So you can go in with 0.05 or 0.06. If the retest occur, fine. You go in with the remaining 0.04 lot size. I hope you get what I'm saying. Most times, the pullback might not occur. The retest might not occur. So what I do is I go in with some of the parts of a fraction of the lot size on my first trade. Then if price pull back to that support, I would execute the remaining lot size because I don't want to miss that move. I don't want to miss that move. Okay? So that's it on USD CHF. You can consider selling below this level. Okay? But if we are selling, we are trading against the trend. USD is still very strong. So if we are selling, we are trading against the trend. That is counter trading. Okay? But you can still make money trading against the trend. Okay? Though it's very risky, you can still make money. Okay? So Euro USD, positively correlated with GU and Australian dollar USD. So last week candle closed as, should we call this a doji? This is not a valid doji because it has a small body. A valid doji is not supposed to have a small body. So this should be a spinning bottom. This should be a spinning bottom. If you go back, you would see that we had a support here and that support has been broken. This tells me that supply has exceeded demand. Supply has exceeded demand. And when supply exceeds demand, what is expected? Price is expected to drop. So based on the formation we have on the weekly time frame, Euro USD is still bearish. It is still bearish. If we are considering buying, since this week candle closed as a spinning bottom, we'll wait for this week candle to close bullish. That's when we'll say, okay, there's a high probability for price to go up. Okay, so based on what we have on the weekly time frame, Euro USD is still bearish, but we could see price pull back into a discount level for us to sell. Okay, so you might want to take advantage of the pullback. You might want to take advantage of the pullback. Just apply your Fibonacci tool, take it from the swing high to swing low. So it's likely price will pull back to level 50 or above level 50. I hope that is clear. So that is it on the weekly time frame. Let's go down to daily. What do we have on daily? So let's say we want to take advantage of the bullish move, the pullback. So we have the resistance here on daily. So 4-hour candle should close above this resistance before you consider buying. Because if you look at the candlestick formation we have on the daily time frame, this was a doji. The next candle closed as an hammer. This tells us that buyers are showing up in the market. So there's a high probability that price could start going up from this point. Okay, so if the next candle closes bullish, that is Monday candle, that confirms that price will go up. If Monday candle closes bullish, that's a buy. Okay, but if you don't want to wait for the Monday candle to close before you execute a buy trade, go to 4-hour. Where do we have the resistance on 4-hour? If this resistance is broken, that's the buy. But like I said, I like to work with the most recent resistance on 1-hour time frame. So let's go to 1 hour. Okay, so this is the 1 hour. This is the most recent resistance on 1 hour. So if the 4-hour candle closes above this level, you could see that price has been in a range, right, for some time. And this is the low of the range. You can see price has been in a range. So if you are considering selling, you want to ensure that there's a breakout below the support. If you are considering buying, you want to ensure that there is a breakout from the resistance. I hope that is clear. So that's my take on Euro USD. Long term, it's bearish, but short term, it is bullish. It is bullish short term. Next pair is USD JPY. I think that will be the last pair for tonight's session. Okay, we'll look at gold before we end tonight's session. Okay. It's obvious that USD JPY is bullish, right? USD JPY is bullish, but I think there is a roadblock on USD JPY at the moment. There is a roadblock. Okay, so we have, this is a resistance, right? So when price hits this resistance, we want to look out for the candlestick formation at this level. If price hits this resistance, we want to look out for the candlestick formation. So if we have a bearish candlestick pattern at this level, if I consider selling, we might consider selling. So we have a resistance here. We have another block here. This is another block. Okay, so this is another block. So the candlestick formation when price hits this resistance will determine what action we'll take on USD JPY. Okay, personally, I wouldn't buy USD JPY. Okay, because price has really gone far. So I'll be looking for a sell opportunity, a retracement. There has to be a retracement, right? Yes, it looks bullish, but we should see a retracement before it continues with its bullish move. That's my take on USD JPY. It's not be wise to jump in and start buying at the current market price. This is where one would have entered buy. You had an opportunity to enter buy here. Even after a breakout from this resistance, you had opportunity. Okay, though you missed entry from this level, you still had opportunity here to enter buy. But entering at this price, as far as I'm concerned, is at a higher risk. I should see price pull back to a discount level before I'll consider buying. Okay, so let's go to daily. We could say last week, Thursday, candle closed bearish. We had a resistance after the close of that bearish candle. Thursday, Friday, candle tested. You can see got to that resistance level. There's a little rejection from that level. It didn't break out from that resistance. Okay, so let's see what we have on 4-hour. It actually broke out, right? It actually broke out from that resistance. We had another resistance on 4 hour. So I think that's the reason for the rejection, this resistance of 4 hour. So the 4 hour candle closes above this level, you might want to risk buying. You might want to risk buying USD JPY. Okay, so if 4 hour closes above this level and you are considering buying, you could just go check GBP USD or Australian dollar USD. Since those pairs are negatively correlated, right? So if you're seeing a buy opportunity on USD JPY, just go to Australian dollar USD. You should have a bearish setup on Australian dollar USD. If you're seeing a bullish setup on Australian dollar USD and you are seeing a bullish setup on USD JPY, there's a high probability that price could go into range or price will not go in your direction. You want to ensure that both pairs that are negatively correlated are showing you opposite direction. I hope you get what I'm saying. It should be in opposite direction. Okay. So that's another way to confirm if the trend, or to confirm if it's the right time to execute the trade. Okay. So if I, for example, if I go to GBP USD and I have a bearish setup on Euro, on GBP USD, and I have a bearish setup on USD JPY, something is not right. Something is not right. Okay, it's not right. So I want to wait for price to pull back on one of those pairs, ensure that they are trading in opposite direction. I hope that is clear. Okay, so that's my take on USD JPY. Now we have a support here on 4 hour. Okay, we have a support here on 4 hour. If a 4 hour candle closes below this support, you might want to consider selling. If 4 hour closes below the support, you might want to consider selling. Let's go to 1 hour. So the most recent support on 1 hour is this. So I'll work with this. I'll work with this. Okay, now if price will continue going up, you might apply your Fibonacci here. Take it from this swing low on 1 hour to this swing high. So we should see price pull back to a discount level before we consider buying. Okay, so wait for price to pull back to level 50 or level 61.8. That is when you consider buying. Okay, so it's either 4 hour candle closes above this level, you want to risk buying, or patiently wait for price to pull back to a discount level. So for example, if you decide to buy above this level, let's say you execute buy here, okay, your stop loss could be at this level, which is about 46 pips. Okay, if you are risking 46 pips, your TP should not go below 65 minimum. Your TP should not go below 65. Okay, so you set your stop loss at this level. If price pulls back after breaking out from this level, if price pulls back to this, to a discount level, you might want to execute another trade. That your first trade is still active, right? But it's in drawdown. It will be in negative. Okay. Then if price pulls back into this level, you want to execute another trade, which is buy. Then your stop loss will be at this same level. So the risk you will take on this trade might not be up to 20 pips on this second trade. So if the price starts going up from this level, okay, by the time price gets to this level, you will be, your trade will be on break even. You would have break even. By the time price pulls back from this point to this point, you would have break even. I hope you're following. You would have break even. Don't say, let me wait for price to get to this level before I buy. Sometimes price will not pull back. It will just keep going up. So best thing to avoid the pain of losing or not catching or taking advantage of that move, be in the market. be in the market. Don't go all in. Go in with small lot size. Be in the market. Okay? Because it's very painful when you have done your analysis, you've predicted the market, but you didn't, you are not in the market, or you didn't execute the trade because you were waiting for pullback. Be in the market. If you are trading with 0.1, you can go in with 0.05. Test the water with 0.05. Okay, then if price pulls back, you still have 0.05 you can execute. Then you go in with that 0.05. But you ensure that the risk on that trade does not exceed 2%. Okay, it does not exceed 2%. So if the risk, let's say in dollar value, is $20 on the first trade, you want to take the first trade, the risk might be high. It could be $12. Then the second trade could be $8. Or the first trade could be $14. The second trade could be $6 risk. But you ensure that at the end of the day, you don't lose more than 1 or 2% of your capital. The mistake most people do is that when they execute a buy, yeah, and price starts pulling back, retracing. When price gets to a certain level, they increase the lot size. Price keeps going down, they increase the lot size. Price keeps going down, they increase the lot size. And before you know it, the account is gone. Everything has to be calculative. Okay? You have to be very logical in executing your trades. Okay, so I think that will be all for tonight's question. Is there any other pair? Okay, I said we'll look at gold. Gold, let's look at gold before we end the class. Last week candle closed as, should we call this a doji or spinning top? Okay, it looks like a spinning top. That tells me that gold will be bearish this week. Okay, that tells me gold will be bearish this week. Now, besides that, the candle closed as a spinning top. What I think happened last week was that they hunted or they cleared liquidity at this previous, you can see this equal highs. They cleared the stop losses at this level. They might attempt this level. Okay, this was the area they were targeting last week. They tried hitting last week. So they were able to hit this equal high. Okay, they were able to hit this equal high, and from that level, price did what? There was a strong rejection from that level. So where will be the next draw on liquidity? Where do we have stop losses? We have stop loss here. Retail traders, they have stop losses at that level. Where again? Yeah, this equal lows. So this is where I expect gold to drop to this week. First target is this level. Second target is this level. And if this level is broken, the next target will be this level. Okay, so I'm bearish on gold this week. I am bearish on gold this week. Very bearish on gold this week. Okay, so what do we have on daily? So we had the support here last Friday, right? Yeah, this was the support. So that support must be broken. Okay, this support must be broken. For me to sell gold, this support must be broken. Let's go down to 4 hour. Okay. So you can see on 4 hour, we had a resistance here. Market tested that level. That level was tested several times. Strong rejection from that level. If this level is broken, then we could see price go up to this next resistance. If a 4 hour candle closes above this level, you might see price go up to this resistance level. Okay, Let's go to 1 hour. I want to identify the most recent support on 1 hour. So we had a support here on 1 hour. Okay, so if 4 hour candle closes below, 4 hour closes below the support, that will be my first entry. 4 hour candle should close below the support. You'll see that price went into a range from this point to this point. So there has to be a breakout from the resistance, the high of the range, or the low of the range. But since the weekly trend indicates that the bears are still in control, okay, since it indicates that the bears are still in control, my focus should be on break of support. Break of support. The trend on the higher time frame is bearish. So I shouldn't be interested in buying. If I'm buying, I know that I'm trading against the trend, which is very risky. Okay, very risky. But the fact that I would have set my stop loss. Okay, I shouldn't be worried or concerned if the trade goes against me. I've already determined the risk before I execute the trade. Okay, so that's my take on gold. I'm bearish on gold this week, but we might see price go up. Okay, I see price. If you apply your Fibonacci to take it from this swing high to this swing low, there's a lot of gap here that need to be filled. Okay, this gap here need to be filled. Okay, so we'll see gold price go up into 61.8 or above 61.8. I hope that is clear. So if you want to sell, it is either 4 hour candle closes below this level for you to sell, or price pulls back into a premium level. So when price gets into the premium level, you don't just jump in and start selling. There has to be a candlestick formation at that premium level, indicating that the trend is changing from bullish to bullish. Sorry, from bullish to bearish. From bullish to bearish. There has to be a confirmation. Don't say you set, some people use pending orders. Okay, expecting that, okay, price will get to that level. Most times, price will not get to that level before it starts dropping. Most times, price will get to that level, break that level, and keep going up. But when there's a candlestick formation at that level, that is a confirmation that, okay, that risk is worth taking. There has to be a candlestick formation. There is no strategy out there that does not use candlestick as confirmation. Elliott wave, ICT, smart money concept, there has to be a candlestick formation. Okay, confirming that the trend is about to change from bullish to bearish, or from bearish to bullish. That is why I don't use pending orders. That's why I don't use pending orders. Because most times you miss trades. Market will not get to that price that you think it will get to. But when you are on, you see the candlestick formation, you can now decide or execute the trade. Okay, so that will be all for tonight's session. I appreciate you all for your participation. If you have any question, the Euro card, okay, we'll look at GU, USD, or Euro card, be able to, okay, Euro card. Let's see Euro card. I posted the chart on Eurocard. I said it is bullish. I think the setup on Eurocard is very, very promising. Very promising. I would definitely buy Eurocard this week. I would definitely buy Eurocard this week. Okay. But based on what we have here on the weekly, it looks bearish. So I think buying is a pullback as far as I'm concerned, a retracement. A retracement. Long time is still, I think it's still bearish. It is still bearish. So last week candle tested this support. There was a strong rejection from that support. Okay, so I'm expecting price to pull back into a premium level. So I would apply my Fibonacci 2 from this swing high to the swing low. So I expect price to pull back to at least level 50. Level 50 at least. Price should pull back to 50 or 61.8 before it continues with its bearish movement. Price should pull back, okay, to those levels. So let's go down to daily. Let's see the candlestick formation we have on daily. So you can see on daily, we had an hammer at a previous, can you see it? Support level. The strong rejection from that level indicates that the buyers are showing up in the market. They came in aggressively. That's what it means. There's a strong rejection from that level. Let's go down to 4 hour. So what do we have on 4 hour? Hammer. This is a bearish hammer. After a bearish hammer, you're supposed to wait for the next candle to close bullish. This is a confirmation candle that buyers are now in the market, and it's right time to what? Execute a buy trade. Okay, it's set already. Euro card is set already. Okay, but I wouldn't jump in as just buy. Let's go down to 1 hour. Okay, so like I told you, I like to work with the most recent resistance on 1 hour. So a 4 hour candle closes above this resistance. That is a buy for me. Nothing will stop me from executing this trade. Though Euro card is not my preferred pair. It's not my preferred pair. But with this setup on it, I can't afford not to execute a buy on Euro card. Thanks, Gabriel, for pointing this chart. Okay, thank you for calling my attention to EuroCard. I really appreciate it. That's the essence of the community. You will see some things that I don't see. Okay, that's the essence of the community. I'm going to take advantage of this buy. Okay, so why did I identify this level? You see what we had here is a fair value gap, right? This is a fair value gap. So what happened? Price went up, pulled back into the fair value gap. Can you see that? It pulled back into the fair value gap, and there was a strong rejection from that level. Okay, so the rule is after price pulled back into the fair value gap, I want to see price break the most recent resistance on 1 hour. That's why I identified this resistance level. Price has already pulled back into the fair value gap, and I expect price to break this resistance before I will buy. If 4 hour closes above this level, I'm buying this pair. I'm buying EuroCard. I'm going to send it. Hopefully tomorrow, a candle closes above this level. I will send it to the group when I execute the trade, like I've always done. Okay, so that's it. Now I also identified this level because there was a fair value gap at that level. So let's see what time frame did I identify. Let's see 15 minutes. Let's see 15 minutes. I identified the fair value gap, or 5 minutes. Okay, I think it was on 15 minutes. You can see it. This is the fair value gap. Okay. The high of this candle, the gap between the high of this candle and the low of this third candle. 1, 2, 3. That's fair value gap. Okay. The gap in between the high of this candle and the low of this candle. Let me adjust it well. Okay. So what happened? Price went up. There has to be a pullback to the fair value gap. So if I wanted to execute this trade here, remember what I said, the rule is after there's a pullback to the fair value gap, the most recent resistance, this would have been the most recent resistance after the pullback to the fair value gap. So immediately this candlestick broke out, I should have executed buy from this level. My stop loss would be at this level. So if I had executed this trade, my risk will be 20, let's say 30 pips. By now, I would have made 32 pips. By now, I should have adjusted my stop loss to break even. And that's what played out here. Price also has pulled back into a fair value gap. I'm waiting for a breakout from that resistance level. I think it was on 1 hour identified. Yeah, 1 hour. 1 hour. 4 hour, 1 hour candle close above this level, I will buy. Now, before I will buy here, I want to go confirm that there's a shift market structure on 15 minutes or 5 minutes or 1 minute. So let's go to 5 minutes. Let's see what we have on 5 minutes. Let's see 1 hour. Sorry, 1 minute. Let me see 1 minute. Okay. 3 minutes. Now you see what we have on what's it called? This is 1 minute, right? This is an impulse move. And after an impulse move, there should be a retracement. So I wouldn't jump in and buy. I should see price pull back to a discount level. So I will just apply my Fibonacci to here too. Okay, this is an impulse move. So I want to see price pull back to level 61.8, to a discount level. That is when I will consider buying. Okay, I want to see price pull back. So it's either the resistance on 1 hour is broken or price pulls back into a discount level. That is when I will consider buying. Now, if price breaks out from the 1 hour resistance before it pulls back to a discount level, I would have executed my first trade after the breakout of this 1 hour resistance. Okay, so if price now pull back into the discount zone, I would execute another trade. But I would ensure that my risk on that trade does not exceed 1 to 2% of my capital. I hope that is clear. So that's my take on the setup on Eurocard is promising. I can't miss this opportunity. I can't. Thank you very much, Gabriel. I really appreciate you, for calling my attention to this pair. Normally, I wouldn't have looked at Eurocard. I wouldn't. Okay, so that'll be all. Do you have any question? Any question? If you have any question, you can raise your hand up so that I can meet you. Any question? Shifunaya, Ebenezer, Jerry, John, KOK, Mrs. Peters, Hope, Said, and Mr. Tunde. Any question? Any question? Any question? Do you have any question? KOK, no question. John, no question. Let me just unmute yours so that if you have question. Unmute your. Just unmute your mic if you have any question. Okay, Hope, no question. Please, if you have any question, ask. If there's anything you want us to look at together, please ask. Because I might not be available to attend to your WhatsApp message. That's the essence for this session. I want to attend to all your questions during this live session. Okay, Mrs. Peters. Okay, so I think there are no questions. I want to appreciate you all for participating in tonight's session, and I want to appreciate the first person to join this class was KOK. KOK, you were the first to join this class. Send me, I hope you have MTN number. Send me your MTN number on WhatsApp. I want to send you data. KOK, send me your number on WhatsApp. I want to send you data. You're the first to join the class and you stayed to the end of the class. I want to give you data. Okay. Just send me your number on WhatsApp, okay? Euro GBP. Okay, let's look at Euro GBP. Euro GBP. Please, if you have friends who can benefit from this class, invite them. Invite them. Some of the things you guys are learning for free here, people pay thousands to go learn it. They pay thousands to go learn it. You could have a friend who is planning to go learn from someone and he has to pay thousands of naira. Let them come and learn for free. Okay? Let them come and learn for free. Euro GBP. This man is still bullish. It is still strongly bullish. Last week candle closed strongly bullish above the resistance. But I think there's a roadblock. Okay? This is a resistance, and this move, this bullish move, the reason for this bullish move could be to hunt or clear liquidity at this high. You can see it's equal high. So it is possible for price to start dropping from that level. They've cleared the stops at this level. That could be the purpose for this bullish move. Okay, that could be the purpose for this bullish move after the formation of a double bottom. Okay, after the formation of this double bottom. So last week move, the purpose for this move could be to hunt for stop losses at this level. So now they've hunted for the stop loss at this level. If it will sell, what are you looking out for? Candlestick formation. You cannot jump in and sell. Wait for a bearish reversal candlestick formation before you consider selling, or a break from a support level, break of support on lower time frame. So let's go to daily. But on the weekly, we could also see this as an impulse move, right? We could see this as an impulse move. So we should expect price to pull back to, so take it from swing low to swing high. So we should see price pull back to a discount level before it continues. If the trend is bullish, price should pull back to a discount level before you consider buying. Buying at this current market price, as far as I'm concerned, is at a higher risk. Is at a higher risk. If I want to consider buying, I should wait for price to pull back at least to level 50. Then when price gets to level 50 and I see that there's a bullish reversal candlestick formation at that level, that is when I will risk buying. Okay, so we should expect price to pull back to level 50 or below level 50, which is a discount zone. Okay, that's my take on Euro GBP. Some people will jump in and start buying because last week candle closed strongly bullish. They would expect price to just keep going up. They will just jump in and start buying. No. As far as I'm concerned, it is overpriced. It's overbought. Let's just apply stochastic or RSI. Let's see what we have. Here's stochastic. Okay, let's see. Can you see it? Can you see it? Is that overbought? Can you see it? It has not crossed it, but it has gotten that level. Let's go to daily. It's likely daily would have crossed. Can you see? Daily has crossed that level. You can see it's overbought. You can see. So what they did, I think, was to hunt for stop losses at these levels. That was what they did last week. Okay, so there's that problem. There is a lot of retail traders who want to jump in and buy. A lot of retail traders would jump in and buy. They want to buy, but you should see price pull back before you consider buying. So you want to take advantage of that pullback. Okay, that's my own take. Take advantage of the pullback. If you don't want to trade the pullback, patiently wait for price to pull back into the discount level before you buy. That's my take. Okay, so let's just go down to 4 hour and 1 hour. You can see 4 hour also is at overbought level. Okay, so we need to see a bearish reversal candle formation. Okay, so last week candle closed as a spinning top. That's the last 4-hour candle, closed as a spinning top. So if the next candle closes bearish, okay, you might want to consider selling, right? Because the spinning top indicates that the trend is likely going to change. We also had a spinning top here. We had hanging man, then we have a spinning top. So it indicates that the buyers are becoming weaker and sellers could show up any moment from now, okay? So, but before we sell, we want to ensure that we have a bearish candlestick. The bearish candlestick must close after the spinning top, okay? This indicates that the buyers are still in control. So we cannot jump in and start selling. If we want to sell, a candle must close bearish after this spinning top, okay? And also since, what's it called? The stochastic is above level 80, one can risk selling if the next candlestick close bearish. Okay, so let's go down to 1 hour. So if the next candle closes bearish, we want to ensure that it's closed below its support on 1 hour, which should be this or this. So not just having a bearish candlestick on 4 hour. You want to ensure that that bearish candlestick closes below the support on 1 hour or 15 minutes time frame. Then on 5 minutes and 1 minute, you want to ensure that there is a shift in market structure on 5 minutes or 1 minute time frame. I hope that is clear. So it is still bullish at the moment, but if a candlestick, let's say 4-hour candle closes below this level, you want to sell and your target to be at a discount level. I hope that is clear. That will be all for tonight's session. Okay. Once more, I appreciate you all for showing up in tonight's session, and I wish you all a profitable trading week. Ensure that you execute your plan flawlessly. Do not be afraid. If you've done the analysis, you determine where to enter the trade. When it is time to execute the trade. You've already determined the risk you want to take on the trade. Execute the trade. Execute the trade. You don't have to send a message to confirm. Just execute. Trust your analysis. Trust your analysis. Do not be scared. Do not be scared. Execute the trade. It doesn't matter if your last 5 trades were losses. It does not matter. It does not matter. Execute the trade. It could be that that trade that you would execute will go in profit. You make profit on that trade and you'll be able to recover those losses you've made on those last 3 losses or 4 losses. But if you don't take that trade, the market goes in your direction, you will feel very bad. You will feel very bad. Okay, so execute your trades, execute your plan flawlessly. Just ensure that you apply proper risk and money management. Always use stop loss. I keep saying it. Always use stop loss. If you are not using stop loss, you will keep blowing accounts. Every trader knows when his setup becomes invalid. Every trader knows, but they don't use stop loss because they don't want to accept losses. They don't want to accept losses. They don't want to take losses. And if you are not willing to take losses, Forex trading is not for you. If you are not willing to take losses, Forex trading is not for you. You will keep losing. You will keep losing. Okay? So accept the fact that you will make losses. Accept it. Accept it. You will make losses. I've been trading for years. I still make losses. I'm consistently profitable because I ensure that for every trade I execute, my risk reward does not go below 1:1.5. That is why I am consistently profitable. Okay? Risk and money management is the secret of successful trading. That's the only way you can manage your emotions of fear and greed. Risk and money management. That is the secret. If you apply good risk and money management, you'll be able to manage your emotions of fear and greed. Very important. Very important. Okay. Thank you. Do have a wonderful night.